Life is hard. We got bills to pay, kids to feed, and we have to spend most of our time at a job that we don't even like. We used to be able to reward ourselves with a nice cold drink, but nowadays even beer is woke. But one thing that's a real game changer is the passive income that I earn every single month with dividends. These are payments I get from all the companies that I invest in who reward me for being a shareholder. As long as the company keeps racking in those profits with their thousands of hardworking employees, I will continue to collect this regular stream of income, which requires no effort on my part. My portfolio has reached new all-time highs at nearly $128,000, so it looks like the stock market is nearly recovered. Now, once inflation cools off, the Fed will decrease those interest rates as people to invest in the stock market and other assets. I see another bull run on the horizon. With this dividend money, I can retire early. I don't need to wait till I'm 65. I can be 40 years old and have streams of passive income flowing on in, and I can buy whatever beer I darn well please. March is part of the tranche where I collect the most in dividends, so before we get into how much each company paid me, which sneak peek is a new personal dividend record, let's take a look at some popular companies that have raised their dividend in the past month. Qualcomm raises their dividend for the 20th straight year with a near 7% hike. Dividend aristocrat General Dynamics has a 5% raise. And how about this? American Express with a 15% raise in their dividend. Imagine getting a 15% raise at your job for doing absolutely nothing. Looking for another reason to love Dick's? The sporting store, of course, is that they raised their dividend 105%. They're now trading at their highest stock price of all time. One of my favorite companies is Applied Materials, and they raised their dividend 23%. That is absolutely huge for a tech company. Realty Income doing what Realty Income does, and that is raising their dividend a fraction of their penny each quarter. It really adds up over time, and the more shares you own, the bigger those payments are gonna get. Now for the reason you actually clicked on this video, to see all the dividends I received in March of 2023. Starting off here, we have Visa paying me $7.43. So Visa, American Express, they're both in the same industry, both in the same sector, and clearly it pays to be a shareholder of these companies. Next up, we have JP Morgan Chase's JEPI. This is a covered call ETF, and they paid me a whole $18.61. I love getting passive monthly income from this covered call ETF. JEPI is a fan favorite here on YouTube, and with a dividend yield in the ballpark of around 10%, it's no question why so many people love them. After JEPI, we have Johnson & Johnson. This is a dividend king, 60 plus years of dividend raisers for J&J. Got $16.26 from them this past quarter. This has been a company I've been buying more and more shares of because they're at a huge discount because of some potential litigation and lawsuits and some potential payouts that they might have to do in the future. But I know this is all really just some short-term news. It's a way to get a solid blue chip company at a discount. Looks like J&J stock price is already rising yet again, so I'm already enjoying some benefits of my investments. So after J&J, we have Microsoft paying me $10.50. Microsoft has invested heavily into ChatGPT. I absolutely love messing with ChatGPT. I ask it the most controversial questions, and I absolutely laugh at the PC answers it spits back out. After Microsoft, we have $12.88 from Honeywell. This is another diversified industrial company, so another solid blue chip company here. After Honeywell, I have 44 cents from Otter Tails, a really small position in my portfolio, just holding them for sentimental reasons at this point. But the stock recently has done really well, and they just continue to pay me dividends, so I'm just going to keep on holding them. After Otter Tails, we have $15.28 for McDonald's. So this past month wasn't a good one for McDonald's. They unfortunately laid off a lot of employees at its corporate office, actually right here in Chicago. So obviously really sad news, but I'm still getting my dividends from their thousands of franchises all over the world that continue to provide a stream of income for McDonald's Corporation. Of course, McDonald's also owns a lot of the land that they charge rent on as well. So $15.28 for McDonald's. And then we have one of my favorite companies, and Realty Income, not Reality. This is one that I've been adding shares to almost on a weekly basis now. I just really want to build up it's now in my top 10 of largest holdings, and this is $12.54 I'm getting every single month from them. So if they were paying out, just once a quarter, this would be around a $37 payment. So getting $12.54 at minimum each month, it really does help me cash flow better. And I know each month that dividend is only going to continue to rise. O has a ridiculous 99% portfolio occupancy rate. They collect well into the high 90% in total rent collection. So I have no concerns that my dividend is not safe from O. So after O, we have Applied Materials, which we previously talked about. They just announced a huge dividend raise in the double digits. They paid me $12.32. They're going to be doing a very nice share buyback program in the future. And this is a company that I see giving me some great capital appreciation in the long term because semiconductors, they are so important to our society, the world that we live in. There's currently a global shortage on semiconductors just because the demand for them is so high. And that's the sector that AMAT seeks to help and serve. So after AMAT, we have Prudential Financial paying me $17.76. So $17.76 from them. A little symbolic because this is going to be the last time they'll pay me for the foreseeable future. I actually sold out of this position. This was a position that I bought during the peak of C19, got it at a huge discount when it was trading in the 30s, and then I was able to sell it in the hundreds. And of course, I collected a really juicy dividend all that time. Just had some concerns on the cash flowing of this business. I also wanted to lock in all the profits I'd made over the years, so it was a great investment for me, and I'm certainly not ruling out buying more Prudential in the future, but I just wanted to lock in those profits for now. So it's really rare for me to sell a stock, but sometimes I just have to do what I think is best for the portfolio. I've also been looking to consolidate some positions. So $17.76 from them. And then we have a healthcare giant here in UnitedHealth Group. They paid me $13.25. UNH, they just announced earnings. I have to go back and look at how they did, but I'm sure it was great because this is a company I do not need to babysit. They paid me $13.25, a really low payout ratio, but they are a company that consistently raises that dividend, a near 20% dividend growth rate over the last 5 years. Just continues to set new revenue records every single year. Just a very profitable business UNH is. So after UNH, we have Equinix bringing me $11.27. Equinix is a data center REIT, very vital to providing that infrastructure for a lot of companies to have their servers on. So $11.27 from them. And then, I just wanted to keep on investing in world domination. So I got paid $17.55 from BlackRock. And not only am I invested in this company, I'm actually doubling down by reinvesting my dividends, making that dividend snowball even stronger, accumulating more shares, accumulating more equity in that quest of world domination. So $17.55 from BlackRock. All right, we have another very vital company to society, and that is Waste Management, providing me $9.80. This is not a sexy investment. It's a very boring company, but I will easily take super boring over super flashy and risky any day of the week. $9.80 from WM. All right, after that, we have $11.18 from Shell. Man, how about those gas prices, guys? Going back up again. $11.18. That can buy me what, like 1 gallon of fuel these days? Maybe two if I turn off the AC. All right, after Shell, we have SCHD. This is actually the first of 2 payments I received from them. I own the bulk of my shares in my taxable, and then I have a small amount in my Roth. So $19.69 from my first SCHD payment. And then we have QYLD paying me $17.74. So how about QYLD? It's actually done better than SCHD in 2023 so far. Let's see if it can keep up this streak. Getting paid monthly dividend income from QYLD, super high dividend yield. So after QYLD, we have Nvidia paying me $1.35. And I don't care how small that dividend is, Nvidia is up nearly 100% this year in capital appreciation. And keep in mind, Nvidia is a $700 billion market cap company. That is absolutely insane. I have a feeling it's definitely going to reach its all-time highs yet again soon enough. After Nvidia, we have VHT paying me $1.84. This is the Vanguard Healthcare ETF. This is one of the newer positions in my portfolio, but I've continued to throw more money into this healthcare ETF because healthcare has been hit really hard this year, and it's not a matter of if healthcare is going to recover, it's a matter of when, and and I know if I buy low, I'm gonna get rewarded when my shares continue to go up. And then Bank of America paying me $12.47. So JP Morgan Chase had a great earnings report, and that caused a lot of the big banks to go up in capital appreciation. So great news for the banks, great news for the economy in general. I also got paid by Fidelity for keeping my uninvested cash in the brokerage. They have a super high interest rate these days, around 4.5% on your uninvested cash. And they're putting that money into treasury bonds, which are essentially the safest investments one can make because it's backed by the US government, which is not going to default anytime soon. So I'm continuing to rack in that money market account money. I'll have a total at the end of this video. I'm not counting this toward my dividend income. So I have another company that I just bought more of on Friday, and that is NASDAQ. This is not an ETF, but the actual company that controls the exchange, $4.22 from them. I also got paid $15.22 from Pepsi, another soft drink giant, which also owns a lot of those popular food brands as well. So I love the soft drinks. I also love the railroads. $19.64 from Union Pacific. Just like Warren Buffett, I'm getting rich by investing into the railroads. Still a very popular way to move goods in the United States. I also got paid $11.21 from another soft drink giant in Coca-Cola. This is another company that I just bought more of on Friday. They still have a starting yield of around 3%. It's hard to ever get this stock on a discount, but I'm just continuing to buy more and more of KO. Moving into my Roth, I got paid $4.36 from X Yield. This is a brother to Q Yield, also managed by Global X. Pays out monthly dividends, except they're doing covered calls on the S&P 500 instead of the NASDAQ. So it paid me $4.36, which went into buying more shares of X Yield. Then I also got paid $3.86 from another one of my favorite dividend ETFs, and that is DGRO. So they paid me $3.86. And then how about this, guys? $10.02 from Ares Capital, which gives out a ridiculously high dividend yield. I think BDCs are often overlooked here in the YouTube finance community. And then I also got paid $30.93 from Fidelity for the money market account that my uninvested cash is sitting in. And then to round out the month, I got paid $2.04 from Divo, another monthly covered call income ETF. Altogether, I had 29 different companies / ETFs pay me for a grand total of $314.93. This is a new personal record and a 30% increase from last year when I made just $242. I now make on average $200 every single month in passive income, meaning the amount I make every single quarter is now up to $602. These are up $3 and $10 since last month, respectively. I also made $53 on my uninvested cash in Fidelity's money market funds. This is basically earning free money, nearly risk-free, as the Fed keeps raising those interest rates to fight inflation. That certainly incentivizes saving. So nearly $360 in passive income for the month. I'm still probably making more money going to the bathroom at work, but each month I'm getting that much closer to reaching my goal of financial freedom, quitting my 9-to-5, having enough money to buy better quality beer than Bud Light, and having my dividends pay for all my bills. I feel like reaching this position is relatively easy. You just have to be very disciplined. It doesn't happen overnight, and if I can do it, you can certainly do it too. Now, one great way to learn about stocks and dividend investing is to join the Dividend Discord in the comments below. This is a great way to meet other like-minded investors who are all on this journey together, and we're having some great conversations in there. So be sure to join. It won't always be available. It's going to be first come, first served. I'd love to hear what companies paid you the most in dividends in the comments below. Make sure you help out a small-time YouTuber by hitting that like button and subscribing, as I make these update videos every single month, and I will buy, stash, and collect cash you later.